You are one move away from having more wealth than you can imagine or being stuck in the system, barely having enough money to get by. When I was in college and I decided not to go to medical school, I was lost. I was dabbling in real estate. I had some side hustles that I was working on, but everybody around me was getting a good job. So I figured, let me try to get a job for myself. I liked real estate, so I found this real estate analyst position available at Petco. It was an entry-level position. I go through the interviews, and at the end of the interview, the person that was interviewing me asked me, how much do you expect to make from this position? And my response was, I don't know. I did not know what the regular salary was for a job. I knew that I wanted to be a doctor, and I knew what it was like starting a side hustle, but I knew nothing about working a job. And she said, the salary for this position is $14 an hour. And I got off the phone and I started doing some math. $14 an hour after college. If I work for 40 hours in a week, that's $560. By the way, this is like more than a decade ago. We're talking 12 or 13 years ago. But $560 for a full week of worth, that didn't make much sense to me because I was working at weddings on weekends. I used to play an Indian drum called the dhol. And when I would work a full day on Saturday, my fee was $600. So I could work one Saturday, the entire day, bust my butt and have a whole lot of fun doing it and make $600, where I could go work at this job where it probably wouldn't be a lot of fun, work a whole week and make less than that, $560, and that's pre-tax, and I needed a college degree to get this job, versus when I was working at weddings, this was just a gig that I picked up by working with my friends. And that was when I decided not to take the job, and that decision changed the trajectory of our life. And what I've learned is that life is kind of like a pinball machine. You don't know where the next opportunities are going to lie. You're like this little ball that's hopping around with opportunities, but you want to get to the end. You want to get to this goal, which is freedom, wealth, financial, whatever you want to call it. But you don't know which opportunities you're going to hit on the way there. But there are things that you can do to help you make the better decisions to get to that wealth even faster, because a lot of people unfortunately get stuck. You make one bad decision, now you get stuck. You get stuck in this job that you don't like. You get stuck in a pay grade that you don't like. You get stuck paying bills that you shouldn't be paying. And now you feel like you keep going deeper and deeper and deeper down that same rabbit hole, getting further and further away from your goals. But there's a way out if you can start to shift which moves you're making. And as I look back onto the trajectory of my life over the last 15 years, the decisions that allowed me to get to where I am today, there were three key things that allowed me to find the better opportunities, to make the better moves, to get me to a better position. And they are: number one, knowledge; number two, risk; number three, discipline. Starting with knowledge, I was very fortunate, and this is a kind of a funny story. I don't know if I've ever told this fully before. My parents wanted me to be a doctor. Very, very, very badly, they wanted me to be a doctor. Since I was a kid, my parents said you need to be a doctor. But ironically, my dad gave me a copy of this book called Rich Dad, Poor Dad. Why did he give it to me? I have no idea. Where did he find it? I have no idea. But he gave me a copy of this book, and I threw it in my backpack. And one day, we're going to India. And flying to India, especially back then when you're sitting in economy class, it's not very fun. Used to sit like sardines. We didn't have TVs in every seat like you have now. It was like a 20-hour journey from the United States to India. I mean, it's a long journey. So I'd put a bunch of random stuff in my backpack. And I eventually picked up this copy of the book, Rich Dad, Poor Dad. And I hated reading. English is my second language. I did not enjoy reading books. I was on the verge of failing my English class in middle school. Like, English and reading were not my hobbies. But for whatever reason, I picked up this book and I started reading, and it was interesting. And I kept going. And this was the first time I was actually interested in a book, when I'm reading Rich Dad, Poor Dad. And I finished the book. That was the first book I ever read cover to cover. And my mind started racing because I started learning about this concept of money, of financial education, of investing. I was never exposed to these things before. Nobody in my family was an investor. Nobody in my family was a real estate investor. Nobody in my family was doing these things that this book was talking about. I was never exposed to these things before, but I knew it was something that I wanted to learn. So when I had that knowledge, I started changing my decisions based off of things that will help me in the direction that I want to go. When I started to make some extra money from my party business that I was running, so I used to work at weddings on weekends, and I had this small event planning company that I started in college. It really started as a party promotion company in high school, and then slowly that became a little bit more of a party promotion company in college, which then grew to be more of an event planning company in college. But I was making a little bit of money. And at first, when I was making money, I was spending my money very stupidly. I was upgrading my car. I put new rims on my car. I put tints on my car. I put HID lights on my car. I put a new sound system in my car. I bought a new watch. I mean, I was blowing money on things that made me look rich. And then I started learning about assets, investments, things that you can buy that make you money. And that was that switch that I decided to stop spending money on things that were making me broker. That way I could buy things that could make me richer. So that was when I started investing my money. But that only happened because I had the knowledge. Number 2 was risk. Now, there's a lot of different types of risk, and I am definitely somebody who enjoys a certain level of risk, but there's a risk of driving a motorcycle, and then there's a risk of investing your money. And yeah, I've done my fair share of stupid different types of risks, but when it comes to investing and financial risks, I've always had this hard head of knowing either I will become successful or I'm going to keep trying until I become successful. And I have to have some sort of risk to get there. And I was very fortunate that I started this journey when I was younger, in my teens and early 20s. But that level of taking risk is so important because no matter what you do, whether it's starting a business or investing your money, there's a level of risk involved. You're going to have to risk your time to learn things. You're going to risk watching YouTube videos. You're going to risk buying books. You're going to risk buying classes. You're going to risk investing in research. You're going to risk investing your money into the markets. You're going to risk trying things. And I have made a lot of mistakes. I made a lot of mistakes with my investments. I've invested in stocks that went bankrupt. I've invested in real estate deals that cost me a lot of money. I made a video on this YouTube channel about my worst real estate deal ever. It was the 3rd real estate deal that I purchased, and it ended up costing me a fortune and a lot of sleep and a lot of stress. And I made a lot of mistakes in business, some of which have cost me hundreds of thousands of dollars just off of one single mistake. But that risk and being willing to take risks allows me to try things. It allows me to make mistakes. And allows me to have the chance to see more potential success. A lot of people know me from my YouTube channel, Minority Mindset, but ironically, this channel is my hobby. This is not my full-time job. My full-time job is running a company called Briefs Finance. We were called Briefs Media. We're transitioning to Briefs Finance. Part of the reason for that is because the whole world and economy is changing because of AI. You might have seen over the last few months, I've started to talk a lot more about AI on this channel. And the reason why is I'm trying to show you the things that I'm seeing with my own eyes in the economy, in the world right now. And as a media company, we did 2 things. We would publish financial news. So we had our newsletter, market briefs, we had articles and other things that we would publish with financial news. And then we would publish investment research. So we had analysts that would do research and we would analyze stocks and we would publish this research to investors to help investors understand where money is moving and find opportunities to hopefully beat the S&P 500. And that's what our reports have been doing. We were audited by a third-party company that we paid for, and they proved that our reports are beating the S&P 500. Well, all that is good, but now when you add AI into the mix, as a media company, it's much harder to compete against AI. And so that's when we had to make a big switch, which is why we're transitioning to Briefs Finance. We're going to be a fintech company forward, powered by media. So we're investing now into our own AI. We're investing into our own software. We're investing into our own technology, which is a huge, huge financial investment. We went out and hired, I think we have 7 developers now working full-time. Yeah, 7 developers working full-time that we're paying for. We haven't launched the product yet, but paying for 7 developers full-time, along with all the data that we're paying for, along with all the tools that we're paying for. It is expensive, and we haven't made a single penny yet, and we're not launching it for months because, well, this is a risk that we have to take because I see where the economy is moving. And if you're not willing to take risks, you're never going to be able to see the upside. It's the same thing with saving your money in the bank. If you have an extra $1,000, you can save it in the bank and feel like you're not taking on any risk. But the reality is that saving also has a risk. Risk number 1 is you're losing value to inflation. But number 2 is the opportunity risk, the opportunity cost, because $1,000 in the bank is not really going to grow. But what if you could take the $1,000 and invest it into something that maybe grows to $2,000? You lose out on the opportunity of growing the $1,000 into $2,000. What if you could take the $1,000 and invest it into your own business idea? You could turn the $1,000 into, say, $100,000. Yeah, you could lose all of it, but there's a risk that you take by not investing that money. And these are things that you have to think about. And the earlier you start, or the more financial protection you have, the easier it is for you to take risks. If you're under the age of 25, really if you're under the age of 30, take risks. You got so much time ahead of you. Really, if you're under the age of 35, go out and take risks. If you're over the age of 35, maybe you need a little bit of financial protection. You need some savings to allow you to take more risks. Because once you get married, you have kids, and you have other financial responsibilities, it is more difficult to take on some risks. But I'm not saying don't take the risks. I'm saying based off of where you are in your financial journey, maybe you just need some extra financial cushion, need some extra savings, some investments to feel comfortable taking on bigger risks. And number 3 is discipline. A lot of people say, work smart, don't work hard. And there's some truth to that. But what I have found is that without working hard, nothing matters. You have to work hard, no matter what you do, whether you're working smart or working hard. But the problem is, a lot of times people associate working hard in the wrong places. If I took that job working $14 an hour and I wanted to make more money and I just worked harder, yes, I would make more money, but I would be making $14 an hour. Maybe I get a raise to $16 an hour, maybe $20 an hour, but there's only so much more that you can earn through that hard work. Now, if there are ways for you to accelerate in your career, absolutely. But the real value of working smart and working hard is how can you find a way to put in effort today and get paid for that effort today, tomorrow, next week, the week after that, the month after that, the year after that, and for the rest of your life. That's what working smart is. Working smart is putting in effort today and then getting paid for that effort again and again and again. Well, now if you know how to work smart, but now you can work hard, which is you can get paid more money today, more money tomorrow, more money the week after that, the year after that, the year after that. Now you have the opportunity to really compound your returns. And the way that this works is finding an opportunity that works for you. This could be investing your money. If you know that you want to build wealth by investing your money, whether you work a job or you work in a business and you want to have these investments, well, the way you build wealth is by owning more investments. And you can own more investments by slowly keep consistently investing your money week after week after week, which works. But if you want to get to that wealth faster, you got to invest more money today, which means you're going to have to find a way to earn more income. See, when it comes to wealth, there's 2 parts that you have to understand. One is the income creation. One is the wealth growth. Income creation is how do you actually generate an income to invest. So you can generate this income by working a job. You can generate this income by running a business. Well, now once you generate that income, you can't spend all that money. That's the first mistake that a lot of people make after they generate that money is they go out and they spend that money at Gucci and Chipotle and the extra guac. Well, when you spend all that money, you have no money to actually build your wealth because you've already made everybody else rich. So once you don't spend all that money, now you have to invest it. And that's where the whole concept, the entire premise of growing your wealth through your investments comes into play. How do you invest your money to become wealthy? And the more aggressively that you can earn money, that way you have more money to invest, the wealthier that you're going to become. Now, I'm not going to get into how you invest your money in this video, but I do have a free masterclass that walks you through how you can get started as an investor and find investment opportunities before everybody else. I'll show you the exact framework that my firm and I use to research investment opportunities before they hit the headlines. If you want to watch this investing masterclass for free, all you have to do is register. And when you do, you're also going to get access to Market Briefs, which is my newsletter for investors, all for free. If you want to get the investing masterclass and Market Briefs all for free, all you have to do is click the link down in the description below. But this is where you got to understand where in the game can you find the most power for you. Is it in how you earn your money or is it in how you invest your money? The way you become wealthy is by investing your money, period. That's why anybody, whether you work a job or own a business, can retire a millionaire if you know how to grow your money. And there are simple ways to start investing. You can just invest your money into the markets. Even with $4 a day, if you do this for enough time, you will retire a millionaire. But some people don't want to wait until they're 65. And this is where if you know how to increase your income, now you can increase how much money you have, not just so you can drive a faster car, but so you can invest your money more aggressively. And this is that key. If you work to earn more money, to invest more money, you are going to build wealth that you will keep for the rest of your life, that your kids can have, that your grandkids can have, because you used your money to buy investments that pay you. And this is that real switch, because most people are working to earn more money so they can have a bigger house, a faster car, and nicer vacations. And this is one of the stupidest things that you can do when you earn more money. And unfortunately, we're never taught this because we're all taught to be consumers. We're all taught to earn money and blow it because everybody thinks it's weird if you have money in your savings account. People don't think it's cool to actually work to build investments over the long term. If you invest your money, you want to see a quick return. You want to throw it into a meme stock or this hot cryptocurrency. That way you can hopefully double your money in 6 months. But that's not really how it works over the long term. That's trading, that's gambling. You can make a lot of money very quickly, but chances are you're going to lose it all. There's a difference. And if you understand the art of how do you earn more money, whether it's through your job or through your business, then it's how do you take that income and apply it in a way that's going to grow and accelerate your wealth. That means looking broke for a little while. I don't want you to drive around in a beat up car for the rest of your life. I want you to have a nice car, but I want you to be able to afford it. And if you really want to be able to afford it, that means having the investments that can pay for it for you. Because if you stop working, the income stops coming in. But if you have the investments, those investments keep paying you when you're not working. And this is the game that wealthy people are playing. Wealthy people are not working to earn money. Wealthy people are working just to manage their investments, grow their investments, allocate their money, allocate their capital. That way they can figure out how they can keep growing their money because all they do is live off of their investments. And this is what makes so many people angry. They say, oh, these rich people have it so easy. We should tax them more. They have all the assets. They have all the wealth. They're controlling the entire system. Sure, you can hate it, love it. I really don't care. But I want you to learn from it because they know something that 99% of people don't. And what they know is if you put in the work to own the assets, now you own the asset. You own it once you own it. It's yours. And that asset can keep paying you forever. And by assets, I mean businesses, I mean real estate, I mean stocks, whatever type of investments that can keep paying you for owning them. Because now you have the income and you've transferred that income into an asset. This income is fleeting. As soon as you spend the income, it goes away. As soon as you stop working, the income goes away. But the asset does not. The investments that I purchased back in 2011, my rental properties that I bought in 2011 out of foreclosure during the 2008 great financial crisis are still paying me every single month. I don't work at them. I haven't seen them in years. My property manager is doing all the work and they're sending me reports every single month. But they're putting money into my bank account month after month after month. And if you can start to accumulate assets, well, now you can start to create new income that you don't have to keep working for. You have to work to acquire it the first time, but once you acquire it once, now it's yours. And this is why I say you are one move away. Why one move? Because that one move, once you start to change your knowledge, you start to change your risk, you start to change your discipline, that one move can change the trajectory of your next move, which can change the trajectory of your next move. Because a lot of people assume you're going to find an opportunity that's going to take you to $1 million. Well, not necessarily, but you'll find an opportunity that'll take you to a better opportunity, that'll take you to a better opportunity, that'll take you to a better opportunity. And so what you want to do is change the trajectory of your opportunities. Not change the opportunity, but change the trajectory of where you are going. Because unfortunately, when people get stuck, their trajectory is down. You get stuck in a crappy job. And now because you have a crappy job, you don't like it, you feel miserable, you feel drained. You're not making enough money. So all of your money is going out to pay your bills. You feel very negative because, man, things suck. You're working hard. You don't have money to save and invest. You're wondering how these people get so rich. And this is where you got to change one step. Not everything, change one step. Change the trajectory of where you're going. Because what happens to that person is a lot of times they just keep going deeper and deeper south. You say, man, I want the nice car, so you go out and finance a BMW. You want a nice house, you go and finance a big house that you can't afford. Or you start renting a house that you can't afford. And now you're going deeper and deeper and deeper into the hole, having to keep working to pay back yesterday's payments. And then you keep working to pay back last week's payments. And now you have to work to pay back last month's payments and you never get a chance out. This is where one step, change the trajectory. Start learning about financial education. Start learning about investing. Once you start changing your knowledge, now you start taking risks to help you better that knowledge. Not to take risks that are going to take you deeper down that same negative rabbit hole, but to take you deeper down the upside through your financial education. Then it's through your discipline. This is discipline through your finances, of how do you actually control your money. I mean, you've heard me talk about the decade of sacrifice, 10 years, not 10 days, 10 years of spending less and earning more so you can invest like crazy. That financial discipline and the emotional discipline of hustling, putting in the work. I don't care what job you have, go in and put in the work. Be the best at what you can do. Do a good job. Because when you do a good job, you are signing your name off of your work product and you are going in to succeed. Create the mindset of success. Don't create the mindset of a lazy person. There's a lot of crap on the internet. You don't have to follow what everybody else does. The whole reason why I call this channel The Minority Mindset is because if you keep doing what the majority of people do, you're going to end up like the majority of people. And right now, the majority of people are broke, unhappy, stuck at a job they don't like, and fat. And I don't say this in a mean way, and I don't say this in general terms. I say this statistically, that more than half of the population in the United States are unhappy. They're not happy at their jobs. They're not financially happy, and they're physically unhealthy. And so if you want to change that, you can't keep doing what the majority of people do. If you ever notice the people at the jobs that keep getting the raises and promotions are the people that you might not like, maybe because they work so hard, they keep putting in that extra mile, they keep doing that extra work that you feel like they're overdoing it. Well, sometimes they're doing it because they care and they want to get to the next level of their career. And oftentimes that mindset doesn't end at the job. That mindset carries over to everything that they do in their life. Because when you care, not only do you do a good job at your job, but you do a good job on your health, you do a good job in your marriage, you do a good job in your own spiritual life because you care. And it's hard when it's something that sucks. But you want to start changing the trajectory of what you're doing. Build that knowledge, take risks upon that knowledge, and do it with discipline to keep coming in because you're going to make mistakes, you're going to screw up, but you got to keep getting back up because I'm telling you from experience, I have screwed up more times than you can count. I have screwed up more times than really anybody that I know. And, well, the reason why I've been able to build what I've built is because of the 10 or 15% of things that I did right. Not the 85 or 90% of things that I did wrong, but the small percentage of things that I did right. And when you understand that and you stick with it, that's how you can change the trajectory of where you're going in life. It's not going to happen in one day. It's not going to happen in a year, but you can see a completely different positioning of yourself over the course of 10 years. I believe in you. I want to see you succeed, and I hope that you got value out of this video. Again, if you get value out of this content, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor. That way we can continue spreading this financial education. And if you want some additional resources on how you can start investing, again, I have my free investing masterclass for you down in the description. And with that, I will see you on YouTube tomorrow. Russia accused the United States of trying to devalue its $37 trillion of national debt without informing the American people. How? By using stablecoins, crypto, and gold. So if you hold dollars or stablecoins or have a retirement fund, you want to pay attention. Why does Russia care that the United States government has $37 trillion worth of national debt?